In this video, what I want to talk about is what we're seeing at the moment in the markets, and I can get rid of these for a start, and Metro Bank in particular, not for any particular reason than it's a good illustration of some of the problems that traders often have. So let's discuss this. I won't go into why we picked a time frame. The reason I picked Metro is because it illustrates, like I said, a problem we're looking at. The first thing is we get the short sell signal here. So that's the red arrow. And the red line being the point to go short, and you can see the numbers there. That's all fine. Pipspredator indicator users will know that. Okay, but what's interesting for this in particular is this. Now, imagine you just did happen to be at the screen, you saw the signal, or you got alerted on your cell phone at this point, and then, of course, it went against you, right? Then it comes back down again. I mean, let's actually just look through this and think about how we would be reacting. And then it comes back up again before actually making a shed load on the short, right? How does one approach that? Now, if you look at our trading manual that we give all apprentices, you'll know there's several ways in which to place trades. One of which might be just simply that you have your fixed stop loss, which is here in the yellow line, which is calculated by the indicator based on the volatility of the markets. All right. And therefore, the stop loss never got hit and the trade continues. The question then arises, yes, but how would you then exit? Right? Well, there were two ways in which to exit. First of all, you could exit whenever the trade runs out of momentum. For instance, that green cross relates to an earlier trade. And you'd wait for a red cross. Now, that's only useful if you're going to be at the screen. A lot of my apprentices say, I'm not going to be at the screen, Alpesh, so what should I do? And I said to them, well, you have two options in that case. One option is you could just have a trailing stop loss. Now, if it's a tight, dynamic trailing stop loss, then the downside with that is it might trail this all the way down, but, of course, would have got hit when the market bounced back up. So you would have got stopped out, and yet the market went in the right direction. That is the most common frustration that happens. That's why I often say to people, let's not have trailing stop losses. Let's have stepped stop losses. Well, what are those, Alpesh? Well, that's when, if the price goes from here down to here and brokers offer stepped stop losses as well, only then at the point it hits this, would this stop loss then move to here? So you can see in that scenario how, by still having a stop loss, you're making ample money. But Alpesh, doesn't that mean we've got to be at the screen? No, we don't have to be at the screen for several reasons. One is when you place the entry order and the stop loss, you also tell the broker you want a step stop loss, which moves in increments of this distance, which is just the same as this distance, which, as I say, my Pipspredator indicators will be familiar with. So that's basically dealing with, again, what we're seeing right now with Metro and an actual trading example and how to deal with those issues of the trade-offs between, do I want a really tight, dynamic trailing stop loss or a stepped one? Or, as I said, if you're going to spend the extra time looking at the screen, you might just wait for the red crosses, which haven't appeared on this sell side, so we haven't got it yet. But let's say, for argument's sake, let's say it just appeared now. Well, then you'd exit. So this stop loss would have kept fixed, and you would only have exited when that happens. Simple as that, okay? So, as I say, several options on how to exit trades and what happens in real trading. Hope you found that all very useful. Oh, I should do one other thing. There we go. Hope you found it all very useful.